You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Let me walk you through the latest half-year financial update from OP Mortgage Bank, covering the period from January 1st to June 30th, 2025. It's a solid example of how a financial institution can maintain stability even in a shifting economic climate. OP Mortgage Bank, or OPMB for short, is the entity within OP Financial Group responsible for issuing covered bonds, essentially a way to raise money by selling debt backed by high-quality mortgage loans. By the end of June, the total bonds issued had reached 15.8 billion euros, which is up from 14.8 billion euros the previous year. That same 15.8 billion euros had also been provided as intermediary loans to 75 OP cooperative banks, keeping funds circulating within the group. One major highlight came in April, when OPMB issued its first covered bond of the year on the international market. A 1 billion euros fixed-rate bond with a maturity of 5 years and 3 months. All proceeds from that bond were distributed to 38 cooperative banks, reinforcing OP's unique interconnected structure. When it comes to financial performance, OPMB reported an operating profit of 2.9 million euros, down slightly from 4.4 million euros the previous year. But despite that dip, the company's overall financial position remained stable. Their Common Equity Tier 1, that is CET1, capital ratio, was reported at 374.1%, which, while lower than last year's astonishing 797%, still represents very strong capital adequacy. The decrease was mainly due to changes in EU regulation, that is specifically CRR3, which affected how risk exposure is calculated. Even with those changes, OPMB comfortably exceeds the required capital levels. The bank continues to issue its bonds under the EMTCB program, and it's worth noting that the amount of collateral backing these bonds, more than 8 billion euros in one case and 9.3 billion euros in another, exceeds the legal minimums, which adds another layer of investor security. They've also made clear strides in sustainability. The bank published a report in March showing that their green-covered bonds helped avoid 58,000 megawatt-hours of energy use and 5,500 tons of carbon dioxide equivalent emissions in 2024. These bonds fund mortgages for energy-efficient homes, making this a win-win for finance and the environment. As for risk management, everything seems to be well in hand. Interest rate risks are hedged with swaps. Liquidity is monitored daily, and OPMB benefits from the broader risk buffers of the OP Financial Group. The bank is also well prepared for EU-level resolution rules, with a strong MREL buffer and clear plans in case of financial stress. So overall, OP Mortgage Bank's mid-year report shows a strong, stable performance with proactive risk management, a solid capital base, and growing focus on sustainability. Important signals of long-term resilience and responsibility in today's financial world. Stay subscribed for more videos.